Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting a quite strong historical structure level for this market. In fact, what we know is that from here, multiple rejections to the upside were created, all of which were quite strong. And what we can see is that the market also here reacted to the zone, then broke below it, broke back above. At that point, this previous support once again started acting as support, and we can see how it has already been tested twice, with the last test being just 2 months ago. And in a situation like this, we could expect more potential bullish continuation away from this area, as already happened in the past every time that the market tested this level. So by looking at this market from a monthly perspective, we could expect bullish price action to be created in the following price action. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, the first thing to keep in mind is that at the moment this market is currently testing quite strong weekly structure as well. In fact, what we know is that from here, this previous rejection to the downside was created. Again here, the market tested its zone and rejected it to the downside. Again here, the market tested a level and respected it as resistance once again. And what we can see is that at the moment we had the break above the zone. At this point, all this previous resistance is currently acting as support here, since the market has broken it to the upside. And we could expect this market to respect the level as support and reject it to the upside. We can also notice that, generally speaking, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we can actually be more precise in identifying our support level by noticing that we have the 0.618 and 0.786 Fibonacci retracements lining up exactly in this box, meaning that inside of here we actually have confluence of support given by both the Fibonacci levels and the previous structure resistance turned support, increasing the probabilities that inside of this area we could see institutional longing, at that point further increasing the probabilities of a potential rejection higher. And we will be speaking about what institutions are doing later on by looking at the COT data. Dropping down on the daily time frame, what do we have? Now here on the daily time frame, this is where we still have a problem, because the market at the moment is still creating daily lower lows and lower highs. This means that at the moment we actually have bearish structure from a daily perspective. So even though monthly and weekly are bullish, the daily time frame is currently still bearish. And until the daily time frame will be bearish, we could simply expect more bearish continuation away from this area. So what we actually need in order for this market to continue higher is to see a potential break back above this high, because this previous high is where this move to the downside started. If now we get a break above this high, meaning if we get a daily higher high, at that point also the daily time frame would shift from having bearish structure to having bullish structure, and at that point monthly, weekly and daily would all be aligning for the same direction. And that is the thing that creates the highest probabilities to have all the directional time frames showing the same direction. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and we check the data precisely for the euro. The first thing that we have to keep in mind is that if we're checking the data for the euro, we're actually already checking euro USD because all currencies on this spot are traded against the USD. And if we check the data, we can see how with the last report, we went from 140k net positions to 178k net positions, showing a strong increase of the net positioning, with 40,000 longs added to the last report, reaching 264k longs compared to only 85k shorts. So clearly, institutions are starting to move to the bullish side of EURUSD following the rejection of that monthly support that we have identified at the beginning of the video. So moving back to the technical side here, until the market will remain below this resistance, it can easily continue lower. However, if we get a break above this resistance after the break on the retest of this previous resistance turn support, this is where we would have good probabilities to see a potential rejection to the upside. Now, I did speak about EURUSD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection higher. Then we had this correction from here. I made another breakdown explaining all the reasons for which we could expect this higher high. Then we had this impulse. I explained all the reasons for which we could expect a correction and more bearish continuation, which is again exactly what the market gave us. And from here, I explained all the reasons for which we could expect bullish continuation away from the zone. And again, that is exactly what the market gave us. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. However, going back to analysis, as I was saying, until the market remains below this resistance, it can easily continue lower. However, if we get a break above the resistance on the retest of this previous resistance turn support, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that given the high request, at the moment there is the massive special promotion as you requested, with a huge upfront discount on the mentorship program price from $497 all the way down to only $97, one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account there, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. At least go and check it out at transparentfxtrading.com. The link is also in the description, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.